And let's get in Darshan to speak about one more mega wealth creator. And Darshan, what's up your sleeve?
This time it's Neelkamal, the counter. We've spoken about it extensively. The counter has been up almost 225 times, not percent, 225 times since 1991. Clearly a big outperformer. So if you just see the stock price, in 1991 the stock price was just 8 rupees. And now if you see the stock, it was 8 rupees. It's all the way up to 1800 that was there a few days ago. So clearly there is a lot of buying that is happening in the company. So just to give you an outlook of what this company does, as far as the revenue breakup is concerned, majority comes in from the plastic division, 83%. Retail is the at-home business that they have, and mattresses is something that they've entered right now. It's a 4% market share. The big one is plastic. Material handling cost 58% of their 83%, and 42% is the molded furniture, is the furniture that you have at home for the outdoor furniture. Apart from it, they have very high market share as far as both these segments are concerned, the molded furniture as well as the material handling. The management guidance is very strong, but it is yet conservative. So if you're looking at both the guidance as far as the revenue is concerned and the EBITDA is concerned, those they are saying a CAGR of 12 to 15% for the next 3 to 5 years. They are being a little conservative here. And as far as the margins are concerned, they have indicated margins will move in from levels on the current 12% to 13 to 15%. As far as what is causing this, crude prices, propylene prices are there. Initially it was 1700, almost 1850 in the second half of 2014. It's come all the way down to 1250. So this is a big raw material cost for them, and that actually benefits Neelkamal significantly. And the volume recovery is clearly seen in the counter. It was 5%, 3%. It was a negative 1%. I'm sorry, it was a negative 1% in the third quarter. It has moved all the way to 9% in the last quarter. So you can see sequentially the volume growth is back in Neelkamal, and that is why you saw this big rally that had happened in Neelkamal.
Okay, and Darshan, what could be the other triggers which could lead the stock higher from here?
See, the triggers are big. See, GST will be an absolute game changer for this company, because you know there is a lot of difference between the organized and unorganized. So GST, if it comes in, this one will be the big beneficiary. Lower crude prices obviously will help because raw material costs will come down significantly. The company aims to be debt free in the next 1 year. That is what they have indicated, and their cash is increasing, and that debt every quarter is falling down. In the AGM, they have said that they would want to sell off at home. If that happens, that could be the big trigger. And they are working at 75% capacity currently, which means that growth will come in without capex. That is the big point that you have to watch out for. And finally, if you're looking at it, Neelkamal Bito is their joint venture. If you go on Amazon or these online websites, it does deals in furniture. The sales have been rather strong. So this could be the game changer, and obviously ROE of 20%, ROC in excess of 25%. No questioning the financials of the company.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.